Hey, I just want to give you a quick market update this morning. We had Ben Bernanke and the Fed yesterday sort of spook Wall Street. Stocks were down in the last couple days, yesterday and today. A lot of people are very worried about the end of stimulus. As you know, I've been saying that the quantitative easing, the federal stimulus, this market is addicted to stimulus. Well, Bernanke came out and said that he expected to taper, meaning slow down the $85 billion purchases of government and mortgage-backed bonds by the end of the year. And he thought if the economic numbers continue to improve and stay strong, that around mid-2014, he would then probably be able to end the stimulus. Again, that is a full year away. What we got really was a bunch of, not a whole lot or a bunch of nothing. They were going to continue the stimulus at current pace, at least for the next 3 to 6 months, probably for a full year. And so the market is spooked by that because no one wanted to even hear about the end of stimulus. What he did most importantly was leave interest rates where they are, basically at zero. A lot of people don't expect interest rates to rise for 2 or 3 or even more years, which is very, very important. Of course, we all know that the stimulus can't last forever, but this could be a reason, a catalyst for stocks to finally correct. We haven't had a true 3 to 5 or 7% correction. And of course, every time everybody says, oh, we need a correction for the market, and as soon as we get a correction in 2 or 3%, everyone panics and goes, oh my God, stocks are going down, this must be the end of the world. It's not. Most likely this is just a simple correction in the uptrend. Most importantly, we'll see in about 3 or 4 weeks' time, we're going to see corporate earnings come out. Corporate earnings are going to be the true tale, the true test for us. If we continue to see corporate earnings strength and earnings better than expected, and corporations do well, stocks and the stock market will continue to rise. If it looks like corporations are not and their profits are starting to wane a little bit and the economy is slowing down, then we could be seeing the top of the bull market. I do expect corporate earnings to be a little bit better than expected next quarter. One other important issue right here is with the Fed talking about tapering the stimulus, it will strengthen the dollar. It will move interest rates up slightly. I don't expect a big move up in rates, but it will keep inflation very much under control. Right now, inflation, according to the Fed, is running at about 1.7%. This is going to keep inflation very, very tame. And I do think once the market realizes and recognizes that this is a very big opportunity, because one, if inflation is very low, it means less at the gas pump, less at the grocery store. It also means imports are less, which is a big boom for American consumers. I think once the market figures this out, that this little correction or fairly decent correction that we're seeing, the market will then rally towards the end of the year once they realize there is no inflation. So although the markets have been reacting and it's been no fun being an investor the last few days, I don't think this is the big one. I do think that may come sometime next year. But right now I think this is just a correction. We have to wait and see. And corporate earnings will be the true teller. And once we see inflation numbers stay tame, that could be a big boom for the market.